Good afternoon, everybody, and welcome to live market analysis overseas macro edition. I was trying to think, what do we do here? Well, I know what we do here, but commodities, indices, foreign exchange, crypto, the whole world of economics in an hour, and more importantly, how it impacts your portfolio. Before we get started, the agenda is very simple. Over to you. It's your Q&A versus my analysis. And as I said, we can cover anything from the global macro side. If you're interested in trading stocks here in Australia or in the US, we have different sessions for those. Tuesdays for the Aussie ones and tomorrow at 12 p.m. for the US ones. No doubt through the course of today's session, we will cover all of the major stock indices like the NASDAQ, the S&P 500, the Russell. Extremely interesting what's going on there right now. And obviously the world of interest rates, commodities, and crypto. Let us start first and foremost with the NASDAQ. I've got some requests coming through. If you're on Zoom, you know how to do it. Of course, you're old hands at this. If you're watching me on YouTube, LinkedIn, Facebook, or Twitter, there are ways to do that as well. And let us commence with the NASDAQ because we found the supply. I mean, this is a market we've been watching very, very closely. We've been quite bullish on it. On Fridays in the sessions where we do US stocks, we've been buying those big names, Meta, Amazon, Alphabet, Nvidia, and many, many more. The names are escaping me right now. Most of those had quite a tough session last night. Big black candle. And ordinarily what we would say is that supply has arrived. And this is the most significant supply candle we've seen, or I'm going to say probably since back here. That is the 25th of April. So over a month now, 6 maybe more weeks. We just haven't seen supply in the market. It has pretty much been one-way traffic with the demand side. So this is important. It's the first big challenge. Also, I note that we've closed beneath this little pod here. So let me label that one for you. There's your little point of supply, and it really should act as a point of demand. Okay, so going forward, that POS ideally acts as a point of demand, and it isn't at this stage. So we've taken out the demand that was in the system at that level by closing beneath it. That is a decisive break to the downside. I look at a candle like that and I think there's a very high probability of a continued pullback, but only a pullback. I don't look at that and say, well, that's it. That's the end. Bull market done and dusted. Bear market is back from here. Okay. You can't make that decision from a single Japanese candlestick. That's not what Japanese candlesticks do. Okay. At least not one that big. Hey, if it was 3, 4 times bigger than that, I mean, it just wiped out the last 2-3 weeks. I mean, then it's starting to be something more significant. That for me, ladies and gentlemen, and on some increased volume as well. Some supply came in. There was, don't forget, volume is buying and selling. So yes, the supply came in, but there was still some demand to pick up the supply, but it was beaten back. It was beaten back, and that's the key point there. I would expect us to potentially come back and retest this low down here at 12,889. And let's see how the candles go from there. So we're probably in a little bit of a pullback phase. I don't think it's the end of the world. That's the message. And I just want to reinforce that by going, what's the quickest way for me to get there? Let us head over here and click on, it's not showing up for you, and it will in just a second. Perhaps just a second more. There we go. I just want to show you this graphic, which I just published to Twitter, and it shows the market breadth of the NASDAQ. So there's about 4.5 or nearly 5,000 stocks on screen here. And we're looking at the performance of those stocks over various timeframes, starting with 5 periods down here. Look, it's underneath me. Trust me. Next to the 10, over this way, underneath me, is a 5. And that means a 5-period exponential moving average, which is 1 trading week. Of course, Monday to Friday. And then we get to the 10, which is over here, 2 weeks, 21 days. What's the significance of that? That's 1 month in trading terms, 2 months, 3 months, 4 months, 5, 6, 7, 8, 9, 10, 11, 12 months out to 1 year. And if you are trading above your 1 year exponential moving average, for me, it's fairly safe to say you are in a long-term uptrend. Now, if we look at that, we've got about just under 30%, isn't it? Just under 30% of stocks out of those 4,500 US stocks, broad range of stocks are trading above their one-year trend. So it does tell us that we have had a bear market very recently. And that red line represents how bad things got at the 2022 bear market low. Okay. So what we're trying to do here, we're trying to see what's a good market breadth for the NASDAQ, or a bullish market breadth, and what's a bearish market breadth. And you can see we have improved, obviously, in those longer term trends, but we're not up to a bullish stage yet. Bullish stages, and we're talking about the bull market top. Go back, check it. How many stocks were trading above their one-year trends on the bull market top before COVID, and then the bull market top post-COVID? I can't remember which one's which, whether the top one is pre-COVID or post-COVID, but it doesn't matter. This is giving us an idea of when the market is at all-time highs, and each time the NASDAQ was at an all-time record high, never been better. This is the sort of market breadth we're seeing. So we're seeing somewhere between 50% and up to 75%, if I'm not mistaken, of stocks trading above their one-year trends, which is pretty low by other market, global indices standards. Normally that's pretty high, but it does show potentially the dominance of some of those big technology stocks on the NASDAQ. And you can see it's fairly flat along the curve, but as you would expect, towards the shorter end of the curve, you can have, it's easier to get above a 1 month trend than it is to get above a longer term 1 year trend. But it sort of splays out a little bit to close to 90%, 86, 87%, and then down to maybe sort of a 55 to 60% is a bull market phase. And you can see the orange line, that's where we were as of last night's close, the 7th of June, depending on where you are listening to me. You can see we did come down from the 6th there in the very short-term ones. But actually, if you go out, we've actually seen some improvement across the curve there. So yes, we've got a big supply-side candle, but I think what we're seeing here in the breadth is maybe a little bit of a rotation out of some of those bigger names. And if anything, a bit of holding or less of a rotation out of some of the medium and small cap names out there. So I think that's an important chart for us to understand today. A couple of other charts I want to show you before I get to your requests is the S&P 500. Okay, so we're looking at the top 500 stocks in America, and not as bad. So yes, there's a big influence there of those big technology names, but not as much, obviously, as the NASDAQ. So we've got a black candle, but not as bad a black candle. That is not even a flinch. I mean, the NASDAQ one is a flinch. That's a shot across the bow. This is just, there's nothing to see here. Everything's fine with that short-term uptrend. And what's wonderful about this, and I'll just go back on the NASDAQ and show you a second, we don't have it yet, is that the long-term trend has actually transitioned back to up. That's really impressive. And if we go back to the composite here, you can see it's very close to crossing over. It's probably a couple of weeks away, assuming nothing too bad happens up here. And then it's as official as you can get. We're in the bull market. I'm going narrower here to the NASDAQ. So remember, NASDAQ composite, 4,500 shares. This really is your big stuff here. That has already transitioned. But I like to look at broad indices, okay, rather than narrow indices. And to me, the S&P 500 is a fairly narrow index. Let's look at the Russell 2000. This is the headline here. This is probably the most important chart I'm going to show you today among many important charts. The Russell 2000 has had 1, 2, 3, 4 out of the last 5 candles are white. 2 of those are monster white candles, as in this one here and this one here, closing very close to the highs. And even last night, almost a gap, maybe not quite a gap there. What's that high there? 1859.39 to last night's low, 7th of June low there. They're a little gap. I mean, how does an index gap up? That tells you there's so much buying across the board. We're not 500 companies here. We're 2,000, not big cap headliners like Apple and Microsoft. We are small caps here. So a little gap up tells you that there's just program buying in the system at the open. And hey, how much selling was there after that little gap? I've been told gaps have to be filled. I've been told when things go up, there's lots of selling because, people are taking advantage of high prices or taking profits. Didn't happen. No supply. How do I know there was zero supply on the open? There's no little lower shadow there. And then we push through the day. And this is all happening. While the NASDAQ is making this horrible candle. So I think that's just super impressive. Yeah, a little bit of profit taking at the end, but otherwise I still think very, very positive. The probability, I think, lies towards strength here. It doesn't mean we're going to be up tonight or we're going to push up, take out 1932, but I think we're going to see the demand side really solidify this rally here. And I think the supply side will just back off and wait and see here. They're probably thinking they might get higher prices as well. So that's an important turnaround. It was the final piece of the puzzle, I think, in my theory, which I've had for many months now. You know that the bull market in the US has already begun. There's so much FUD out there, fear, uncertainty, and doubt, and it ebbs away at you. But trusting the underlying trends is the big part. And this was one of the underlying trends which really hadn't come to the party. So that's important. Look, helping that along was the NASDAQ banking index here. This is the bigger banks, the BKX, and then the smaller banks, the regional banks. You can see the huge push up there. So this is a little bit of risk aversion. Is that the right word? Coming out of the market, a little bit more risk-taking ability. Look, one of the big risk factors, perhaps just backing away. I'm not saying we're out of the woods completely on this hashtag US banking crisis, but certainly the price is going up. The fund managers coming in, they're assessing the situation. Hey, what do we know? We know nothing. Hey, what do I know? I know nothing. I can't speak for you. Maybe you're a very intelligent human being, but I've got no idea what's happening next, and I can't go out there and analyze every single one of those thousands of US banks. But I do know Morgan Stanley do that. I do know Goldman Sachs do that. I do know Bank of America do that. I do know Citigroup do that. And that analysis then translates into demand and supply. And we're seeing excess demand in the system there. So that's really important. A couple more items here. I talked about the S&P 500. There's the S&P 500, little black candle at the end there. Let's zoom in. Okay, now remember, this is a capitalization weighted index, so the bigger you are, the more impact you have on that candle. If I make every stock within the S&P 500 have the same weight, this is what happened last night. We saw a white candle, okay? Not a black candle, a white candle, and a decent one as well, reflecting what happened in the Russell there. So all this talk, and again, the FUD mongers, they keep telling me that, it can't be a bull market because it's only being run by a few tech stocks. Well, FUD mongers, the market started to broaden out last night. I think that's super important. This is the Midcap here, Midcap 400, some nice candles, actually turning the corner there really well, and the small caps reflecting what happened in the Russell as well. Actually probably explains maybe why the Volatility Index went down last night, even though the NASDAQ tanked, and that is now at 1377-ish. We're at the lowest level since pre-COVID. How about that? That's super interesting and super important. The SKEW's a bit high. This one bothers me a little bit. And the SKEW index is talks about the volatility, implied volatility curve, and how that can be skewed in terms of favoring the buying of far out of the money puts compared to buying far out of the money calls. Okay. Now, why are you buying puts, far out of the money puts? You're expecting a huge move down in the markets, or you are protecting your buying. You are buying like crazy. We saw what happened in the indices, and you need some protection against that. So you're using the cheapest options you can to hedge yourself against a potential black swan event. So I'm watching this SKEW going up. I understand it's not great when it goes up. Why? Because it has a bit of an uncanny knack of before the big comes, telling you it's coming. But I'm watching this with optimistic caution. I think it's hedging. I'm not sure if it's speculating of the big move. And you can see what's happened here in the SKEW in the past. This was the Fed liftoff. We saw it move up to 147. That's not great, but still relatively calm. Anything over 150 is starting to ring alarm bells. 156 certainly ringing alarm bells. That was literally the start of the bear market in 2022, top of the S&P 500, and this one actually rung the alarm bell just prior. And this one was just prior to COVID, 2 months prior to the COVID bear market. Now, ladies and gentlemen, I implore you, how the hell did the SKEW know 2 months before COVID that we were going to have a 2 standard deviation move That doesn't make any sense to me unless you believe in conspiracy theories. And then this one here is 2 months prior to the 2018 bear market. I'm not kidding you. So the fact that this now is 150, it hit 158, super interesting. Now just over 150 based upon last night's close indicates an approximate 17 or 18% chance of a black swan event. But wow, is this a super interesting time for us to be looking at stocks? Yes, it is. And that is my introduction today. Let us head over to your requests, and we're going to kick off with Craig here, looking at West Texas, and I'm just pausing there because I don't seem to have any takers on the streamers there, so I don't know if it's working. Hey, streamers, if it's not working, apologies. You're watching me in the replay, that's okay. Now, for Mark asking about Allchem and Pilbara Minerals, hey, we'll do those on Tuesday, but I will look at lithium for you in just a second. Let's head to West Texas Intermediate Crude, and I'm going to head over here to do that. Sorry for the jumping around. It's just a function of the wide range of platforms I'm using to find these things. Okay, so we can see the trade view window now. That gives me up-to-date prices on my energy contracts. I don't have it from the particular data provider I use in Amy Broker, which was the last platform. West Texas Intermediate Crude. It's still flat, isn't it, Craig? Not much going on there. I know we got dragged into a long trade a little while ago, which got belted. I know we've even contemplated short trades not that long ago, which I said, no, not even going to bother on that anymore because we just get chopped up. And I've been right on that. If you've been long, if you've been short, you have been chopped to pieces on crude oil because ultimately the trends are telling us it's pretty much sideways. The price action as well. I mean, if you can get higher peaks and high troughs or lower peaks and lower troughs out of that, congratulations to you. And if you can see a pattern in those candles, then once again, congratulations. And maybe there's a few more black ones in there. Okay, let's go 60-40 black ones, which would be consistent with the fact that the long-term trend is down and the short-term trend is, well, I'm going to say down, even though it's flashing a little bit neutral towards the end there. Is there a trade? Not for me, not based upon the fundamentals, to be honest, which really, OPEC trying to cut production in the face of global growth starting to crumble. Let's face it, really starting to crumble now from the data we're seeing out of the US and out of China. And it's really only the employment data so far that is kind of keeping this thesis of the soft landing going. So, yeah, look, I'm going to pass on that one. Craig, if you want anything more specific than that or a different periodicity, so if you're looking intraday, let me know. But hey, if I don't have trends, I can't give you a definitive answer. Let us go to Mark's request there, which is for lithium. And we're going to head back to here and over to here, which happens to be the SKEW again. I'm going to scroll down my list here. We've got a lithium carbonate first, and we can see price action here from around about 2021 to current, so about 2.5 years of lithium carbonate prices here. This is the battery grade material as it trades in yuan per ton, right-hand scale in Shanghai. And we can see obviously the huge sell-off here from 600,000 yuan per ton down to 160, breaking through the price for agreed by a number of major Chinese battery manufacturers that they would try and cap that at 250. Well, put a floor on it at 250, went straight through that. It's come back to that. And as I predicted, it would sort of just hover there or thereabouts. To be fair, it's done better than I expected. And it's continuing to sort of grind higher each trading session, a little bit high. So that's good as well. We're back above 300, but a fairly modest rate of ascent there. So I'd be watching for this level up here. It just turns out why it just is. It just works out that way, that my long-term trend zones, once we crack beneath them, tend to offer dynamic supply, dynamic resistance, which means we might hit that zone and come back down again. But otherwise, if you're a lithium bull, hey, it's looking better today, certainly than it looked last week and last month also. But are we going to reclaim those highs at 600,000? The V-shaped rally is a big positive. Don't get me wrong, is a big positive. But I just think we're going to find a price maybe even halfway between those two extremes and settle there for a while. Lithium hydroxide is already settling. as you can see. Let me get rid of some of these things. And really, those arrows were just telling you what I just said. I think we're going to settle somewhere in between, and maybe we might see somewhere between sort of 50 and 52 as the key level. Is there anything sinister in those lithium minerals prices to suggest to you that you've got problems with your lithium companies that you're holding on the ASX or on the NYSE? No, I don't think so. I think it's supportive of, probably not the right way to put it. I'm not sure if it's supportive of higher prices for lithium stocks, but I can't see anything in here which would suggest lithium stock prices need to be lower. Okay. While we're here looking at metals and we're thinking about what's happening in China, let us head over to the London Metals Exchange over here and have a look at some of these big industrial metals. I said before that the data is getting worse, that economic growth, I think I used the word crumbling for economic growth, for what's happening in China, the property sector over there. Yes, there's been a little bit of news recently about how China is going to try and lower some of the key deposit rates over there, which could facilitate the lowering of some of the borrowing rates or mortgage rates for Chinese borrowers. But it's kind of useless because Chinese people aren't really borrowing right now. And there's not a lot else really they can do apart from giant infrastructure projects or try and stimulate some of those municipalities and regions to start to adopt those again. But they are loaded with debt. So I don't think that's going to happen. And I think we're just going to see a managed sort of slowdown of the Chinese economy, which doesn't necessarily bode too well for what's happening here. And if the US economy slows, because, hey, we've had 500 points of interest rate, basis points of hikes over there. We've had 410 over here. It's like, it's just, what's the catalyst? What's the catalyst here? I'm waffling, aren't I? Bottom line is, looking at aluminium, the short-term trend is down, the long-term trend is down, and let us just focus on that instead of the waffle, because, hey, what do I know? What do you know? What's going to happen is going to happen. Aluminium looks terrible. Copper, actually, look, a half-decent little rally there, to be fair. We've got somewhat of an inverted head and shoulders pattern. The long-term trend is still down. I think we have seen a decisive break to the downside. If it closes above 8,600, you might be able to twist my arm into a more bullish stance, but I'm going to stick with the bearish side of the ledger just for now. Let's have a look at the, I can get the iron ore price, but you can see here, if you can zoom in, it doesn't like that percentage sign. So I go PCT and light bulb, there it works. I've seen a little bit of a bounce in iron ore prices, but once again, the trend is not looking great there. This is the contract in Shanghai. It has bounced better. Let me get rid of some of the stuff on the screen there for you. But still, I would say skewed to the downside. Nickel, key industrial metal, key industrial steel making component. I don't think iron ore is going to get a huge boom without this one at least turning up, and it's not. I think that still looks very sick. And then we're looking at some of the other industrial base metals here. Lead, still in a downtrend. Tin, 50-50, and zinc actually bouncing a little bit there, but otherwise that trend is very well established to the downside. So we've done energy, we've done lithium, we've done the base metals there, and probably should also, for the uranium crazies out there, I know they are not giving up on the hope that uranium is about to make its huge charge. Let's have a look at the uranium chart, and it is trending higher there. Maybe we'll put a line chart on this one, and you can see it better. But for me, looks pretty good. Uranium bulls, I think you're in with a very, very warm chance here. It's just, you just need stocks to respond, don't you? That's look, if that was anything else, I'd say there's a very high probability that it's going higher. I'm going to go 85% higher. It just looks very good. So hopefully that makes you happy out there. While we're here, maybe just a quick look at the high-grade copper chart. I know it's one we do follow quite closely. And let's go back to, not to the bars, let's go to the candles. And we may have some people short on this one. You can see the minus 1/3. I said last week you might just ratchet your stops up to break even. You might have even been tickled on those stops. I don't know. But if you're not, you know where the stops are. I think I might have even said just above that little low there. Maybe you're still okay. But maintain those stops at break even and stick to the short side. I still think that's the way to go. but happy, as I said, with a break-even stop to concede that maybe it goes higher. I just don't think you're adding new short side risk just yet, because these white candles here are strong enough to prevent you from doing that. And unless you saw a really nice black candle here or another upper shadow that didn't take out your stop loss, I think you're just staying put on those positions. Okay, I've done uranium for Derek. Let's look at the Russell 2000. Colin says, I've done that one. Wonderful. I've done copper. I did it on the London Metals Exchange and on the COMEX as well. It is starting to turn up, says Mark. It's up 5% from the low. And as per my just comments 30 seconds ago, I still a bit bearish on this one, but happy to be proven wrong. Okay, copper bulls, happy to be proven wrong. You can see stops are trying to break even, and therefore let's see whether the chips fall on that one. Carlo also asking about copper. Michael asking about Bitcoin and what's happening to Binance Coin as well, and a few of the other cryptos, obviously with this SEC saga with Binance. And look, it's not, I wouldn't say it's great news. Price action tells us that we had a pretty awful reaction to it, and then we had a better reaction to it, and now we're back to awful. I think on balance, crypto's in a bit of trouble here. Don't forget, it's only US Binance that is part of this lawsuit, as far as I know. Correct me if I'm wrong. It's not Binance everywhere else, but that is no doubt a big part of their business. And then possibly, if the US has some decisive designation on what is a security and what is not a security, other jurisdictions may follow. Is it as simple as Binance then just getting the right licenses and Coinbase getting the right licenses and everything going from below the table to above the table? I don't think that's a bad thing in the long run, but it is going to be a bit of a uncertain time until then. So we can see some of the ones that have been actually mentioned in the what would you call it, in the charges? I don't know. No, there's a name for it. COTI, which you've probably never heard of, but it is one I do look at. That was specifically mentioned, as was ADA. You can see where some of these have gone. So it's all getting a little bit too hard here. If we just, there's Ethereum there. Actually, it's held up pretty well, hasn't it? Plenty of talk out there from the Bitcoin maxis saying that, Bitcoin is the only true non-security crypto. The SEC has not mentioned this in the charges. It doesn't matter. It's just, this is a confidence game. I've always said that crypto's a confidence game, and there's very little confidence right now. Buy, hold, sell. The buys off the table. Buys off the table, and you've got to buy the dip. Okay. Buys off the table for me. Happy to be proven wrong on that. Sell if only because, go do something better with your life and your money, and hold if you love pain. So they're your three options there. Decide which category you're in. The question was also asked about Binance Coin. There you go. The market is telling you what it thinks. Is it the end of Binance? I don't think so. I don't think that's what this is telling us, unless it starts to really drop. But it has done this before. Tricky little situation there. Jill asking for copper, uranium, done those. Nickel, done that, Carlo. AI stocks, is it coming off the boil? Unless you've got an index for me to look at, Haraju, probably not for this session. We'll do that tomorrow. Possibly, they're coming off the boil, but there's going to be ebb and flow in that space. Refer to my earlier comments about the NASDAQ. Michael asking about Dr. Copper. Wow, we've got some real interest here in copper and gold. That's a very sensible place to go, Therese. Let's do that now. So let's head over here and have a look at our gold chart. We might go back to this one right there, and down here will be the gold price, and we can look at silver as well. Okay, last week I think I went back to neutral on gold. I don't know, am I regretting that? A little bit regretting that today. Yeah, look, I think I think this candle here is decisive. I think this is the problem. Tell me if I'm wrong. I mean, hopefully you can read candles just as good as me now. That's why we're here. You would look at that also and say, we've got some serious problems here. So let's not go back on the past where I obviously started to tell you that, you know, we need to be getting ourselves out of gold long positions. I think my analysis there was very, very good, if I say so myself. Last week we saw some nice candles coming in off an area where there has been demand in the past, and we said back to neutral. And then we see this big black candle here coming in at the short-term trend zone. Right, forget this. That's supposed to just match up with that. I do these manually. If you see these zones that are forecast in the future, they are actually put on manually. Quite a lot of work required to maintain my charts. But it is a labor of love, I assure you. So the short-term trend is an issue, and you can see that short-term trend zone, which has just been so good as acting as an area of dynamic demand support in the past, is now acting as supply. And then to get two confirmations at that zone with, I think, quite decisive candles, quite decisive showings from the supply side. I think we're at risk here, and that low there is 1931.76. And if we went minus 1/3, minus 1/3, minus 1/3, minus 1/3, that's, you know, that's actually four thirds. If you had any left, let me just say, on a close beneath here, close less than here, minus another third. But it's almost starting to feel like a short trade to me. And it would be the most aggressive short trade because of this, okay? But there are a bunch of gold bulls out there, aren't they? And they've been caught on the long side. They might have got a little bit of hope from that rally, and maybe they do spill out. But that long-term trend, look, it's held so well in the past. Maybe we just don't fight that one. So I'm going to reiterate my neutral position from last week, but my bias is becoming more bearish on gold, at least in the short term. Okay. Let's look at silver. And that might probably disappoints a bunch of people. But don't kill the messenger. Don't get angry with me. I'm sure there are things being thrown at the screen right now. I can't see them. Don't worry, they can't hit me. You know, whatever's on the desk. But hey, I'm just calling it as I see it. Don't shoot the messenger. Shoot the market. I'm just interpreting what the market's doing. Silver's a ditto there. That candle last night was really telling, isn't it? That upper shadow, reaching, trying, probing. Don't forget, at one stage, that candle, ladies and gentlemen, it looked like this. Not like that. Like this. Hold on. You know what I'm about to do. You've seen it a million times before. It looked like that. Okay, forget the white bit there. Pretend it's not there. Sorry, forget the black bit there, the existing candle. Pretend that that's what we're seeing, or what the real candle is, because that is how it looked last night. And if we had that candle, if we ended up with that candle, it's actually a really strong showing from the bulls, isn't it? In terms of price action, in terms of besting the short-term downtrend, in terms of really confirming this here as a point of demand, right, which is, you know, higher again than these other 2 points of demand, really starting to look like that inverted head and shoulders pattern, taking out this point of supply, closing above it. The silver bulls had the opportunity to do that last night. And at one stage, that candle was big and white like that. But the only way you can get from that candle, ladies and gentlemen, is if the selling started to come in. In fact, if you think about how that candle it was actually here, because that's where the open was, wasn't it? So this is the full candle, right? And then the selling comes in. And we're starting to get this upper shadow building, right? This upper shadow here is building. I know it's on the left-hand side of the candle. Imagine it's in the middle, but it's building, and it's building. Why is it building? Because the demand side just cannot sustain that momentum. It's giving way. It cannot handle it. And then we get back to the open. In fact, we push further than the open. We push down. This is now a black candle, right? And we actually go down to here. And then we had the tiniest little bit of a rally at the end to close the session out like that. I think that's a decisive candle telling us here that hopes of a nice rally in silver are over for the time being. I know I spent a long time on that, but great case study in reading the candles. Excellent. The next request was for gold and silver from Carlo. So Therese and Carlo, done and donner. Let's head to Haneli's request now for the Nikkei and the German 40, which is the DAX. So let's head up here and let's do the Nikkei first, which is going to be in Asia, obviously. Oh, wowzers. That is an impressive candle, isn't it, Haneli? Let me zoom out a little bit, put it into perspective. Let me keep zooming out. Let me hit the monthly chart and let's say that, well, that's all the data I have. Now, obviously the NASDAQ was trading prior to that. I think the all-time high was around about 40,000. Correct me if I'm wrong. I'm pretty sure, and it's only a little bit. I mean, this is when I started looking at markets, literally right there. But it certainly goes back before that. I do have some memories, but I'm pretty sure that the top on the NASDAQ, the Nikkei was over 40,000. Somebody confirm it for me if you've got a chart that goes back further than this Amy broker one. In fact, let's head over here. We might even get it. You can't see this, everybody, so don't panic. I'm going to see if it has the all-time high on the NASDAQ. And it doesn't, which is a shame. I'm looking at the futures contract. I have to find the cash market. No, anyway, doesn't matter. Okay, let's head back to your screen. I'm pretty sure it's 40,000, but that candle there, I think, is extremely, extremely important. And the fact it has engulfed the entire range. And you often hear Japanese candlestick analysts, and there are so many experts, just quality Japanese candlestick analysis on YouTube, particularly, and TikTok as well. Brackets, sarcasm. They will tell you that, oh, engulfing, it's all about engulfing. That's the one. That's the one you want to see. Yes and no. Certainly, engulfing patterns are important, but they grow in importance. This is an important candle. So if we call them candle 1 and candle 2, right? This is why really question whether you're getting value out of watching TikTok or YouTube, apart from my stuff. Both candles are equally important. And the fact that candle 1 was so bullish, what it does, you think about how you feel. Because if you're a trend follower, or even if you don't have a strategy, you're just a punter, and you're just getting excited about what's happening here, right? On the Nikkei. And why is it not updating? Yeah, okay. How do you feel there? Are you going long? Are you euphoric? Are you excited? How are you applying your capital? And I would say it's showing up as candle 2 now, just by virtue of we can't see the next one, but I'm talking about this candle here. All right, we are long to the teeth here, aren't we? Long to the hills. And this is why that first candle in the engulfing pattern is so important, because if you can get that, it's just flipped. The market's just flipped. 99.9% of traders now are just on the wrong side. On the wrong side of this now. I mean, it's just sad face emoji, right? Crying. face crying, tears, whatever it's called, emoji. So the smart money came in and they knocked it. I don't have volume on this, but I suspect it was substantial. And you just have so many traders now just on the wrong side, and it's going to take them a while. It'll take them a few candles to spill out. And probably they were leveraged, highly excited, and that leverage could actually cause quite a sharp pullback. So this is very close, I think. Candle 2 is very close to what I call, and it's not in any Japanese candlestick book, the species ending event. It's a big deal. And straight away, without any question, if I was long this, minus 1/3. But I think given its size and significance, I would, for safety, dust another third just in case. Don't ask any questions, whatever you can get today at the open. And that would leave me, and this is going to be totally counterintuitive, with at most 1/3 remaining on this trade. That's the bit that's going to sort of probably surprise a few people, but that's just the model. And the reason why we've still got 1/3 remaining is this is the most amazing trend. And I don't want to completely discount it, but certainly taking a substantial amount of the table. And I'll leave it up to you if you wanted to go more than that. But that is a big black and nasty candle on the Nikkei. Doesn't mean the long-term trend is over forever. No, and that's why I think the 1/3 is still there. But certainly we're going to get a meaningful pullback here based upon that price action. Let us head now to Germany and have a look at the DAX. And no big black candles there, so that's a big sigh of relief if you're long this one. The price action is good, not great. The trends are good, so this is still good. I know we've got a bit orange there. That's not fantastic, but it's not sell everything just yet. The price action, as you can see, is certainly lower troughs, but not yet lower troughs, higher peaks. That's what I wanted to say there. There's your point of demand, point of supply, I should say, point of supply, point of demand, and point of demand. So the good news is that we do have higher peaks in the system. We did take this out, or at least we tickled it. We actually haven't closed above it. That's important. And I would say when we are able to leverage off maybe that short-term trend zone and close above this high here, and I'll give you a number in a second. It is 16,115. So close above 16,115. Equals plus 1/3. Happy to do that. But we're 50-50, aren't we? And if we were to see something else, if we were to see, say, the price action, draw this a different color here, start to do something like this instead, right? Then we've got bigger issues at hand. Okay. And I've drawn those deliberately sort of around there, around sort of here. And you would be, if we were to see that price action, and this is totally hypothetical, minus 1/3, and then certainly minus 1/3 here. I think you would already have been a minus 1/3 here. This is why we don't get out of everything all at once. I don't get into anything all at once either. Okay, I think we're pretty good there. Got some Craig asking for some FX now, so let's head back here. And let me check if the streamers have arrived. They have arrived. Brendan saying, could you look at thermal and coke and coal? Certainly, we'll do that after we look at the foreign exchange pairs. So let us head over here and scroll down. And the specific request here is for US dollar, Japanese yen, which actually I think looks very good. Let me just zoom back in for you and do that. Escape that. Okay. US dollar, Japanese yen, I think still very much skewed to the upside. If we just skip down for a second to the US dollar index, it doesn't make any sense, of course, because I'm on a monthly chart. But let's stay there for a second, monthly chart. Obviously, huge run up, pull back. We were kind of looking at that 105 level as a pressure point for supply. The monthly chart actually looks pretty bullish here. I mean, if it can hold above that light green zone, in fact, probably push it close above 105, then this should go higher. That's more accidental than intended to be there. This is the dollar index now. You can see it changes everything, doesn't it? There's our 105. We talked if we could get above that, looking very, very strong. Last week, we noted a little bit of bearishness there. Look, it has sort of played out that way. Not largely so, and I think we're a bit like oil, aren't we? We're kind of stuck in the middle. Short-term trend is completely flat. Long-term trend is completely flat. Short-term trend is definitely skewed to the upside, but the price action with lower peaks now and just sort of hovering inside that last trough has gone a bit neutral. Let's head over to the Japanese yen, which I said at the start does look good, and this now is the picture my brain wanted to see on the daily chart. I think it looks very good actually. So short-term uptrend in place, long-term uptrend, high peaks, high troughs, well, certainly high troughs. We've got a little lower peak here as we're consolidating beneath 141, but nothing to be too concerned about. Candles, I think, obviously, just wonderful through here. Beautiful white candles. Some supply came in that trough terminating at this little point of supply, big tick there, and we're now seeing this old point of supply really acting as a point of demand. And last night's candle, that's last night's candle. This is a new candle forming for today, discounted. I think looks very good. I'm a plus 130 here. I can't really see any reason why we can't add risk to this one. So plus 1/3 on that based upon last night's candle. I know it's pulling back into the range today, but if you're a daily trader that's irrelevant, I just go out and buy it now. A third of my intended, well, whatever my usual risk is, a third of that, and I'm just getting it cheaper. That's the way my brain says, to the candle signal I saw last night. Okay. If you wanted to go to an intraday chart to really time it better and say, well, maybe find just at least a little bit of a high peak, high trough move, say in the 5-minute chart first before you did that, no problems at all. But it doesn't fuss me too much. Just hopping in now on the daily chart. So plus 1/3 there for me. Let's go through a few of these other ones. Not so much the Aussie yen. I suspect it will be heading up. Actually looks half decent. I don't think that's the one I'm interested in though. We have talked in the past about the New Zealand dollar crosses against the sterling. I still think that's very good. We've only had a very modest pullback there. And again, last night's candle I think is a big push to the upside, and I think close enough to the white to my light green zone. So I'm a plus 1/3 here as well. Happy on that one. We also have the sterling versus, no, it's a bit flat. You could do that one. I don't think that's as good as the sterling. So stick with the sterling crosses, not the euro crosses. And then I want to get to, I just can't see it right now. There it is. This is the one I wanted to talk about. I think that's probably the best one. Just a great trend. And I'll explain to you why I think this has still got plenty in it. Look at that. That's the one. And I know I've said a few times on this. I don't think I've written it on the screen. So let me just officially write one now so I can hopefully come back and crow about it later on. If it goes the right way, if it goes the wrong way, I'll cop that as well. But that's the place you need to be. And the reason for it, don't forget, I keep telling them, a broken record here, that foreign exchange is all about interest rates and relative yields. It is the absolute key driver. And you can see the US 2-year yields are heading up. And that is obviously helping the USD versus the Japanese yen. Okay, so look at the shapes of those yield charts. What's happening to the yields on the yen versus the yields, and I don't know if you noticed here, the minus sign. Did you notice the minus sign? Compared to this, which is at equivalent of 450 versus -6. Okay, and the other thing you want to then look at is this chart here, which I think looks amazing. Like if that was a stock chart, we're piling on. We're plus 1/3 all over the place, aren't we? But it's not a stock chart, ladies and gentlemen. It's the price of money in the United Kingdom, and it's going up, and that's bad. It's bad if you're in the UK. But good if you want to go long the GBP versus the JPY. Okay, what's the Aussie one doing? Look at this. And this is why the Aussie dollar's had a resurgence lately. Okay, it's got nothing to do with China. In fact, it's the opposite. China's probably getting worse. But we've seen the RBA go total Armageddon on us with 2 consecutive rate hikes after a pause in April. The old dummy head fake, right? Sent us this way, and then they went that way with 50 basis points worth of hikes. And the market's had to adjust, and it's had to adjust big time. That is a monster. That's bad for stocks. It's bad for the economy. It's only good if you've got cash in the bank and you want to put it in a term deposit. So super interesting times right now. Now, if you're wondering how to trade some of these things, because you just tuned out, your eyes glazed over, and because Carl started talking about Forex. I was like, what, mate? Just tell me what lithium's doing, buddy. Just tell me what copper's doing. I'm up to my gills in lithium and copper stocks, mate. And you're talking about the GBP. What the hell's that? The GBP, what the what? Okay. Come on. Snap out of it. There's other stuff out there to trade. And for me, it's all charts. It's all just charts and candles, isn't it? So if we wanted to set up a trade on the GBPJPY, how would we do it? Find it on the ThinkMarkets platform, go minus here. Why? Because I want to start small. If I've never traded FX before, I'm not going to go boom, 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 right? I don't want to do that. So I want to start as small as possible. All right. So I want to get my eye in, so to speak. And this is going to cost me $62 of margin. I need to maintain that in my account, at least that much, preferably more, obviously, because I don't want to have a margin call where I need to top that up. But that's my money. I get it back at the end of the trade. Okay. That's not your P&L. Your P&L comes from this line here, your pip cost. Okay. And if we're going to trade that little bit, it could be 1, 2, 3, 4, 5, 6, 7, 8. It's irrelevant. Who cares what that is? It doesn't matter what this number is. All that matters is, well, if this thing goes up or down, how much am I going to make or lose? This is how simple trading Forex is. And this amount here is in Australian dollars, assuming your account is denominated in AUD. So we're going to make or lose all of 11 cents for every 1 pip move. Now, what's a pip? It's always the biggest, it's always the rightmost of the big numbers. And you can see here the big numbers are 1 and a 1. Now it's a 0. It's that number there. So if we go from 174.10 to 174.11, guess what? You're long. You just made 11 cents. Congratulations. Now, you might say, okay, well, I can go for a bit more than that, Carl. I'm good for it. Trust me. Okay, congratulations. Work out how much you want to risk after you start to look at these areas in here, because where do you want to take profit? I'm going to head back to my chart here because I've got to actually work this out, or actually not that chart. I'm going to go here and here, and we'll actually work this out. Let's figure out what is potentially in this one. So we're going to go back to Forex, and we're going to go to GBPJPY, and I'm going to zoom out and find some other levels here. Look, this is like, there's nothing there. I mean, until you get to sort of here, 180, maybe there's a little level in there. But probably 188 is the bigger target. Where do I want to set my stop loss? Well, certainly under here, I think. So see that little demand point. So you got shadow, you got shadow, you got shadow, and you got your peak. So somewhere around here. So like a 172-ish, right? You go maybe a little bit higher, 172. Oh, let's just go. Look, let's go a bit lower. Let's go 171.97. Okay. And that we'll see what the target is in a sec. So let's go here, here. Stop loss, what did we say? 171.97. Okay, $22. Can you afford that? Now, what's my target? I reckon we could go 179.56-ish. I mean, the 180, it's a big round number, massive round number, multi-year target. People will start selling at 180. We want to get out before they start selling, right? So 56, 66, somewhere that's not exactly 180, if you get what I'm saying. Now, if this all goes to plan, right, click confirm buy, your worst case scenario is to lose $22. Let's call it $23. Maybe you even get some slippage, but your slippage on FX, on a currency pair as liquid as this, is going to be negligible. So let's say $23 downside, $60 upside on a chart we think looks really good. Is that something you can do? Only you can answer that question. I think that's something everybody can do. And there's so much more you can trade on this platform. So I know that's a big plug for the platform, but I think you need to snap out if you're thinking of 20 people asking me what the copper chart's doing. Let us conclude for you coal faithfuls. All right. Actually, before I go, I'm going to go coal next, I promise. But I wanted to look at the cocoa chart. That looks great. And you're going to say, Carl, mate, I love chocolate, but I'm not trading cocoa. And I'm going to say that looks really, really good. And coffee, if you like your cocoa and your coffee, this is the one here that we have on out. There you go, coffee. So that is a monster chart there. So for both of those, and I think I told you to buy coffee. Go check the tapes. It might have even been down here on that candle. If not, it was on that candle or that candle, but somewhere certainly. We covered it a few times. I told you to buy coffee. Not as in, hey, go get me a coffee. As in, go buy coffee, ladies and gentlemen. And let me just, so I know, put plus 1/3 because that is a monster. And I don't think people want me to work through it unless you'd say, hey, Carl, please work through it. I think you get the picture, right? But you can do that on our platform. And gosh, I'm not good at drawing in here. Apologies. Let me get rid of that. And then I'm just going to go up to cocoa and then just type the plus 1/3 here so I don't forget. Plus 1/3. What an amazing, platform that is when you can do trade your BHP and then trade coffee, cocoa, and the Japanese yen versus the sterling there. Mark's saying, mate, Forex CFDs on ThinkMarkets. Clapping, I think that is. Still got my L plates on, but the demo account is a good place to learn. Absolutely, and that's another thing. You get a demo account with demo money, which you really can't blow yourself up on. But I would suggest, it's just a suggestion, like if your worst case scenario is $22, might as well have some skin in the game because everybody's an expert on a demo account. That's just my thinking. Mark correctly saying Cocoa is not on ThinkMarkets CFDs with a sad face. I'm going to get that put on for you, Mark. It is my mission because the chart looks amazing. Can't make a note of that. We want to get Cocoa on the platform. Let us do copper and then we're done for the day because we're getting close on time. Copper, coal, and it's right here. I promise you, there it is. There's your coal. That's your coking coal. Why is it in the doldrums? Hey, remember we talked about aluminium looks terrible. We talked about nickel looks terrible. We talked about, iron ore, copper, a few things not looking so great. But it's all about global growth here. So this is a key component of your steelmaking process. And let's face it, there's a lot of steel around and not a lot of demand for that steel at the moment. And we've all heard about this so-called China stimulus, but it's there you go, right? It's not like we're going to be throwing up another 50,000, apartment towers, when they're demolishing them by the dozen right now because they can't finish them. Get where I'm going with that. And then we go to the other coal, which is the keep warm coal. And made a little bit of news a little while ago because it had a little bit of a pop, sort of went up about 10%. And it's hard to even see a 10% move now because it's gone down so much. But look, my suggestion is I don't think that's the beginning of the next great bull run in coal, if you get my drift. And it could be. I don't know the future. But I think the trends are still very well established to the downside. And if this was the beginning of the next great big bull run in coal, I think it would have had a little bit more of a follow through than what we saw last night or even yesterday. Okay. But hey, I'm happy to stand corrected and the market will correct me. Very simply, the market will correct me by making this thing go up. And then I'll be the first person to say, guess what, everybody? The next big bull market in coal has begun. And I will write on the screen something that looks very similar to this. Okay, not that we can actually trade coal, unless you literally want to go down to Bunnings, hire the trailer, right, drive out to Newcastle and load it up with coal. Okay, so we're talking about what's going to happen. What's going to happen with your coal stocks? I guess I've got a bunch of, hey, Carl, you didn't change the screens. Okay, what did I say about coal? It looks bloody awful. Paraphrasing there, short-term trend, long-term trend. It had a little bit of a bounce, so what? I don't think this is the beginning of the next bull market, but I'm happy to stand corrected. And if it did that sort of price action, I'll be the first one to tell you to jump back on board, but it hasn't. And that is it for us today, ladies and gentlemen. Hopefully you enjoyed the session. I certainly did. If you want to ask about some of the stocks, lithium stocks, coal stocks, do that on Tuesday if you're looking for the ASX update, or do it tomorrow if you're looking for the USA update, and we will have a look at those AI stocks tomorrow as well. Register at www.thinkmarkets.com/au/webinars. If you're not a client of ThinkMarkets, you really should be, because we are the good guys in the Australian broking scene. If you're not in Australia listening to me on YouTube or wherever, because I do have lots of people listening from overseas, we've probably got an office near you because we have offices all over the world. You can trade shares and, of course, the CFDs, which are commission-free with us over all sorts of commodities, futures, crypto, and shares. Market-leading spreads. Head to www.thinkmarkets.com/au if you're in Australia, / wherever you are. We are an award-winning broker. We literally just got nominated for Best Platform here in Australia because we have the easiest to use platforms and the best trading apps. Dedicated account manager like Khan, who was very generous to give us his time in session today with 24/7 customer support all over the globe. If you're watching me on any of the streaming services, please hit the subscribe button to stay notified of any of my future updates. And super important, hit that like button to let me know you like what I'm doing, and I'll continue to do more of it. Apart from that, it has been a pleasure chatting with you today. All the best for your trading and investing until we catch up again. Bye-bye for now. Just a reminder before you go that everything we've discussed today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before making an investing decision based upon this general advice, you should consider it carefully or seek the help of a financial professional. You can learn everything you need to know about ThinkMarkets and our amazing products by heading to our website and downloading our product disclosure guide.